to the podcast. This podcast discusses about intra-group services, transferpricing controversies around intra-group services, and strategies for efficiently managing controversies surrounding intra-group services. I am Nupur, and joining me today is Anil Gupta, a transferpricing expert with 15 plus years of experience in the domain. Welcome, Anil.
Yeah, hi Nupur. Thank you.
Coming to our first question, inter-group services often refers to services provided by a multinational group entity to another group entity of the same multinational group. Over time, we have seen an increase in the volume and variety of inter-group services that are provided across multinational. What are your thoughts, Anil, on this?
Thank you, Nupur, for asking this question. There are few reasons behind this trend actually. Firstly, as multinational corporations expand their operation globally, they often establish subsidiaries or affiliate in various countries. These entities may require support services from other part of the group to ensure smooth operation to achieve economies of scale and efficiency. Secondly, I would like to touch upon the advancement in technology and communication have made it easier for multinational group to coordinate and deliver services across the border at very fast pace. With the rise of digital platform and virtual collaboration tools, it has become more efficient to share knowledge, expertise, and resources within the group. Further, I would like to add that from a commercial standpoint, it doesn't make sense that each local entity within a multinational corporation to invest excessive manpower and resources in areas where they may lack access to the best practices or specialized knowledge. This can lead to inefficiency, duplication of effort, and inconsistencies between the different entities of the multinational group. This is where IGS can solve the problem by centralizing certain activities or setting up in-house shared services center. M&E can achieve operational efficiencies and ensure optimum resource utilization. Therefore, we have seen in the past there is an increase in the volume of intra-group services as well as the variety of services. Over to you.
Thanks, Anil, for laying down different points. Indeed, from the achievement of efficiency, economies of scale, and commercial sense point, those completely make sense, and those are relevant points which you highlighted. Coming to the next question, we discussed many multinational companies provide various services to their subsidiaries across the globe. However, determining a fair value for these services could be challenging. Some key questions and issues arise in determining whether intragroup services are provided and the arm's length charge for an intergroup services. To determine whether the intragroup services are provided, various tests, some prominent ones being the need, benefit, rendition test, are often carried out. Often the emphasis is placed on ensuring that such services entail commercial or economic benefit for the subsidiaries for which the same is performed, and whether an independent enterprise in comparable circumstances would be willing to pay for the services if performed for it by an independent enterprise, or would it have performed the services in-house for itself. Furthermore, charges for intergroup services could be direct charges or indirect charges. If a direct charge is not possible, multinationals must apply cost allocation or apportionment method, which often require again approximation or estimate to determine an arm's length price. Tax authorities often challenge the criteria for allocating these expenses incurred for intergroup services. Furthermore, in determining what constitute an arm's length price for intergroup service is matter of interpretation and analysis, raising a lot of documentation and compliance issues. Much has been spoken about things like developing accurate and detailed service agreement, appropriate benchmarking, maintaining robust documentation and record keeping strategies, and many other points. Anil, what do you think are the main issues around intragroup service, especially from the point of transferpricing controversy?
As you mentioned, Nupur, the tax authorities are closely scrutinizing the intra-group services transaction, both from TP and corporate tax perspective. You briefly touch on some of the point issues, Nupur. What we have seen over the last several years, most challenges made by the tax authorities resolve around the major issues pertaining to the intergroup services are: issue 1, none or insufficient evidence has been provided to substantiate that the services has actually been provided. In addition, most of the time we have seen that the tax authorities always take an argument that taxpayer fails to demonstrate the effectiveness of the services received and the related benefit derived. Therefore, in my point of view, for a services to consider render, the OECD guidelines have laid down two important tests to be satisfied. Firstly, the so-called benefit test is whether the services rendered provide economic or commercial value to enhance or maintain its business position to the service recipient. Secondly, in applying the benefit test, the guidelines also recommend willingness to pay or perform for itself test. That is whether an independent enterprises in comparable circumstances would have been willing to pay for the activity if performed for it by an independent enterprises or would have performed the activity in-house for itself. Therefore, in intra-group services will be recognized if both the tests are fulfilled. However, if one of the two tests is not fulfilled, such an intra-group services would normally be disallowed. Here I would like to add that most of the time we have seen that the taxpayer is very cumbersome for them to prove the benefit. That's where if you are paying hefty money with regard to the intra-group charges, I would suggest that always focus on 2 points, that whether whatever charges you are paying to your group companies is there's a reduction in the operational cost or improvement in efficiency or better quality control. If let's say I talk about the non-monetary benefit, there's a consistency has been improved or ease of management or monitoring has been improved or there's a better protection of the data. That's where you can justify the amount of charges you paid to your multinational group companies. Let me touch upon the issue number 2. Most of the time we have seen the tax authorities argue the taxpayer fails to demonstrate that the local entity has genuinely benefited from such services and that these services do not duplicate any activity that the local entity is capable of performing independently. Benefit received from IGS are often invisible. The taxpayer struggle to demonstrate the benefit received through the tangible documentary evidence. Sometimes the services may be available on call and the value and importance of such services may vary yearly. In such cases, what I suggest that look at the extent to which the services have been used over several years rather than solely for the year a charge is to be made. Lastly, I would like to touch upon the third point, which is no justification has been provided for the selection of the allocation key, explanation for the component of the cost base, and the basis of determination of markup to be applied on the cost base for the intra-group services arrangement. Therefore, in my point of view, when it comes to justification for the arm's length nature of the charges for intra-group services, there are few key aspects that multinational corporation should pay attention to. Once the benefit test is met and verified the services exist, the next step is to determine the arm's length price for that services. In order to meet the arm's length principle, the charges has to be computed in the same way that the independent party would be willing to pay for those services and would also agree in a similar circumstances from both service recipient and service provider perspective. I would like to briefly touch upon that while determining the IGS charges, one has to exercise the judgment with regard to the selection of the cost pool as well as the selection of the allocation methodologies. The correct way is to identify the cost which you can incur while performing the services. If let's say if you have incurred certain cost for the benefit of one entity, ideal situation would be you charge out that entity. After charging out this one, whatever the balance cost is left, use appropriate allocation key which reflect the nature of the services. And finally, once everything is fixed, you apply a arm's length markup. If you fix all these three, I don't have doubt that the tax authority would challenge your charges for intra-group services. These are the important issues which I have seen during the past several years. Nupur, back to you, Nupur.
Thanks for the elaborative answer, Anil. Indeed, those covered most of the points. Further, a pertinent point to mention is benefit does not necessarily need to materialize, but rather it can be expected. Also, you highlighted a lot on documentation, and I would agree that transfer pricing documentation should include a benefit analysis to support the intra-group service. Such analysis should demonstrate cost saving, administrative efficiency, better quality control, and the non-monetary benefit of centralized services such as consistency, ease of management, monitoring, etc. Further, it is essential that in today's age, documentation is on one hand important, but it is also important that multinational lives in substance per those documents. Separately, transfer pricing document or transfer pricing study should also specify responsible employees, those are in charge of intra-group service along with their roles and responsibilities. Coming to the next question, you touched on the point of of duplicative service, certain services do not warrant any charges, like shareholders' activity, duplicative services, or activities providing some incidental benefit to the multinational group. Can you please share your thoughts on these? And have you ever faced litigation around these services also?
Sure, Nepo. If you recall the issue number 2, which I have highlighted, that the level of benefit provided. What does it mean, the level of benefit provided? So the OECD guidelines has provided a specific example that the intra-group services under certain circumstances are not chargeable, like shareholder activity, duplicative activities, passive association, incidental benefit, or on-call services provided. Here it is worth mentioning that all above 5 examples do not meet the benefit criteria or benefit test. That is, they do not benefit the service recipient and therefore not chargeable for the transfer pricing purposes. Let me explain this one. Not all services rendered by the group entity warrant a charge to other member firm. For instance, no benefit. Services do not provide any benefit to a receiving subsidiary, but to provide a benefit to the group as a whole. Secondly, the shareholder activity do not provide other group entity with the economic or commercial value to enhance or maintain this business position. What do you mean by shareholder activity? Is basically if it is protecting the interest of the shareholder or it is obligation of the shareholder. They are not needed at the subsidiary level. An independent party would not willing to pay for in such circumstances. That's where I'm saying that if you feel that it is helping the shareholder, ideally it should not be charged out. Similarly, for duplicate services, what is duplicate services? So imagine that when activity is provided by one group member to another and the latter either already performing those services or they are procuring from third party, then why they need a charges for that those services? Imagine that if you have HR at a local entity level, however you are getting a cross charge for HR services as multinational group companies, surely there would be a dispute and tax authorities would ask this question. If you already have a legal or HR in-house, why the M&E group is charging for those services? Unless and until you are saying that we are not capable of performing those services locally, then it is justified. Otherwise, most of the time I have seen the tax authorities has disputed on those charges. Therefore, to me, according to the OECD guidelines, it is very hard to justify these charges like what I have explained above.
Yeah, I would agree. I would have some cross questions here. Definitely, there are clear direction that these services need not to be charged, but there could be circumstances when it might be difficult to justify to the tax authority that actually the services fall in this category. Have you seen that situation ever, like tax authorities claiming that it is not a shareholder service or it is not duplicative services?
Yeah, see, that's where I'm saying, even let's say if these services, so that's where the onus is on the service recipient, that they have to justify that these services are not shareholder activity or let's say passive association. Just take an example. Let's say if your group rating, because of your group association, your rating has got improved. Would third party pay for these services? Answer is no. Because of your group association or you are getting a better credit rating, there is no question that it's not something that you are getting a economic value or benefit because of intra-group services. It's just because of your association you are getting it. I don't think that the tax authority would allow these kind of charges unless and until there are a clear-cut value into the services received or it is giving an economic benefit to the service recipient. Then only those situations you are allowed to. These intra-group services may be allowed by the tax authorities.
Yeah, thanks, Anil. There have been situations where tax authorities have criticized a lot around AMP expenditure, advertisement, marketing, and procurement expenditure. Those may also sometimes have indirect benefit on some of the subsidiaries, but still it's difficult to prove sometime that the benefit was incidental and it was not subsidiary was directly involved in those AMP expenditure and that should be allocated to the subsidiary. Have you came across such issues?
Yes, we have seen that these things because sometimes we see that the regional director is sitting in Singapore, let's say for an example, and the local entity level they also have a sales team. This question often comes that if you have so many sales people, you know your market more than the people who are sitting overseas, then why you are paying those sales or let's say charges to your group companies? See, it can be allowed provided that there is a clear-cut demarcation of the roles and responsibilities and the nature of services provided. Just take an example. Let's say if the salespeople sitting in regional headquarters, if they are designing or implementing broader level or overall strategy related to the sales, whereas the local people are responsible just for execution or local implementation, then I think in those situations there is a justification and the management charges may be allowed by the tax authorities. But that's what, if you remember that I'm saying, there should be a clear-cut demarcation that what local entity does and what the regional office does. If you can establish these two things very clearly, I don't have any doubt that the tax authority will challenge this intra-group charge.
I would completely agree, and probably value chain, corroborating it with value chain analysis could help further justifying the roles and responsibilities of the individual entity and justifying the case better.
I would agree, because in some time I have also seen that there is a one charge coming from the head office, then there is another charge is coming from the regional office, and then the local entity also have some people who are managing those activities. See, in this three situation, when multiple charges are coming from different location, yes, I agree that there should be a clear-cut demarcation through a value chain analysis, or we say that we follow the key personnel, what is their role and responsibilities. If we can clearly differentiate and demarcate who is doing what benefit the local entity is receiving from each of the service provider, and you have a proper backup documentation that who does what and what are benefit received at the local level. If you can clearly establish these things, probably you are through with the management charges. I don't see any issue. But let's say if you fail any test, whatever I have explained, probably high chances that the tax authority would say that there is a clear-cut duplication of the services.
Definitely. And management charges are one thing, or that is a picking point for the tax authority to say that this might not be deductible. And maintaining or supporting documentation around it is cumbersome and painful exercises, because level of detail required to prove that actually management service was provided and the entity benefited out of it requires very detailed documentation and some documentation around maintaining timesheet, and nobody or people might not keep track of maintaining timesheet 5 years before or for 7 years before, or maintaining other detail of the person who was involved in the entire process, and the personnel might not be with the organization anymore. So yes, with changing roles, people moving out from one organization to another, sometimes becomes difficult to justify such type of charges.
Yeah, agree.
Coming to the next question, to avoid non-deductibility of intra-group services, M&E need to have adequate documentation in place to support the two tests, benefit test and the willingness to pay, from the point of service provider establishing that services have actually been rendered, from the point of service recipient establishing that the service rendered provide a benefit to the service recipient. We already discussed a lot on this topic, but as you previously also mentioned, a lot of emphasis has been placed time and again on documentation and substance of the entire arrangement. Would you have some more points to add to our previous discussion here?
Thanks, Nupur, for asking this question. It's very prominent things you have asked me. If you see that most of the intra-group service charges has been disallowed only on most of the time on one point, that there was enough evidence provided by the taxpayer. No explanation provided about the cost pool. What is the basis of determination of the markup? So let's say here I would like to break this thing that if you want to justify your management cross charge, there is only 4 pillars. If you can fix that, management charges would be allowed by the tax authorities. What are those pillars? I will split this one into 4 parts. One is need test, whether and what was the need to obtain these services or support. Second, benefit test, whether and what benefit was derived from the said services. Evidence test, very important, demonstrate that the said services was indeed received from the overseas offices. Fourth, computational test, to demonstrate that appropriate allocation or apportionment of expenses and inclusion of arm's length markup. If you fix all these 4 points and explain it properly in your TP report and keep the proper documentation, I have no doubt that tax authority would challenge your intra-group service charges number.
Yeah, for sure. And like I also mentioned earlier, that one is maintaining the document, and second is living in substance to those documentation. And it's not just that maintaining documentation, maintaining documentation would completely suffice, but M&E should live up to those agreement or documentation also.
And Nupur, I just like to add last point here that most of the time we don't pay attention to the agreement, like you have said that. What happened that the agreement is signed 10 years before, okay? Whereas it lists down the nature of the services, 10 to 15 services. Probably not all group companies receive the same nature of services. So it is very important that you look at the nature of the services and then accordingly cater whether who is receiving what. Sometime I have seen during the tax audit, the same agreement is produced in the audit and tax authorities raise this question. Hey, look, your agreement says 15 services. Give me the evidence for all 15 services. And taxpayer couldn't justify that they are receiving all these services. So important point here I want to highlight. If those 15 services is not applicable to a particular entity, please amend your agreement. Otherwise, the tax authority will say that you haven't received the 15 services, but you are paying huge money for all those 15 services. So this is very, very critical to examine all your agreement, your supporting documents, as well as the actual conduct, how, who, and when the services has been rendered.
Yeah, completely agree. But generally, you touched on the agreement point, but even in practice, we see that generally multinationals define the service clause very widely because, of course, agreement are something that cannot be executed every day. So they just want to keep the wording bit broad so that other future services could also be covered. But considering what you mentioned, it appears that multinationals should be very concrete services clause and define the services very clearly and appropriately.
Yeah, that's where I'm saying that they need to pay attention. And it's sometime I have also seen that you're touching upon this point. I also seen that there's no agreement at all. And this is one of the questions asked by the tax authorities. If you are going to pay such a huge money in third party scenario, would you pay such huge money for receipt of the services without having an agreement? If answer is no, then how you are paying the management charges to your group company without having a service agreement, which doesn't explain the basis of charge, nature of services provided, the invoicing term, payment terms, and all that. There is nothing in written. How we can believe that you are paying such a huge money every month without having any understanding? It's a big no. No.
Yeah, definitely I would agree, because sometimes it is seen that executing an agreement is not required from legal perspective. So maybe sometime M&E multinational may not execute any agreement, like the point you mentioned. That requirement is just coming from transfer pricing, documentation, or transfer pricing or tax side, but not something that is legally required in some jurisdiction. So yeah.
Nupur, I think if let's say legally it is not required to have a written agreement or sign agreement, in order to defend the management charge, it is always advisable. And what we have seen that the most of the time tax authorities say, if it is not required, it's fine. But at least have some written understanding.
Yeah.
So that IRB know the basis. They want to see the basis. That is the important point actually.
Yeah, completely agree. And these are some of the basic document tax authority also need when they start the audit process to understand the transaction, the nature of services provided. So some form of documentation needs to be provided for them to also better understand the case. Definitely what you highlighted around the 4 tests is essential to ensure that the documentation covers all the points and not just 2 or 3 points. Coming to the next question. As discussed previously, different low value added intra-group services could be added. As discussed, often we also see a lot of discussion around low value added intra-group services, and there are often some simplified approach for such sort of services that are mentioned in the OECD transfer pricing guidelines. What comments would you have in this regard? Have you seen controversies around low value added services?
Sure, Nupur. I think this is a welcome move from the OECD actually, that it's, that the TP compliance and the benchmarking is expensive exercise. So what OECD does that they introduce this low value added services concept, that if the services are not a main revenue generating activity, they are supportive in nature. Instead of doing a proper benchmarking analysis, you can follow the low value added services concept laid by the OECD. But one has to exercise the judgment why implementing the low value added services. First, you need to know what is the meaning of the low value added services. Let me touch upon that. Basically, what OECD has said that low value added services are of a supportive nature. They are not part of the core business of the M&A group and do not require use of unique or valuable intangible, or do not involve the assumption or control of substantial or significant risk. If you satisfy these are the criteria, then you will fall with the definition of the low value added. Let me explain that what doesn't fall within the low value added service. So let's say if you are providing R&D services, you are providing marketing services, sales and marketing services, you are doing sourcing support services or contract manufacturing or some other in-house services like reinsurance and all those, probably these high-end services would not fall within the definition of low value added services. Most often we have seen that the low value added services are those services like finance, accounting, HR, general IT and all those. The OECD has clearly said that if the nature of the services are low value added, you do not need to do a proper benchmarking. You can just apply a markup on the related cost which is equal to 5%. So basically OECD has recommended 5% mark. However, what we have seen the most of the controversies. So let's say if you are a non-OECD countries or your local legislation doesn't endorse the low value added services concept, be mindful that you need to do a proper benchmarking analysis in order to prove the arm's length markup to be charged on the intra-group services. However, there are certain other countries, they follow the OECD concept, or there are some EU member states generally accept the simplified approach. So, Nupur, these are my points around low value added services concept.
Yeah, completely agree that the practices varies across the jurisdiction and one should be mindful of the local legislation and the acceptable range in that jurisdiction when it comes to low value added service. Considering the issues involved, when and in what circumstances you think it is opt for taxpayer to go for advanced pricing agreement or tax ruling sort of arrangement with the tax authorities?
Thanks, Nupur. I was expecting this question from you actually. The test is if you have a huge intra-group charges and you have seen a lot of litigation in the past, especially from the tax authorities, and there's a huge risk is involved, then probably I would suggest that go for advanced pricing agreement because it will gives you a certainty for certain periods, and especially where there's a double taxation involved, I always recommend that go for advanced pricing arrangement or the tax ruling. Side by side, you can also, let's say if you don't want to go for advanced ruling, MAP is another option. You can opt for managing your intra-group service charges. These are my comment actually.
But MAP would come after stage where the matter has been picked up, right?
Yes, exactly. So if it is picked up, you can go for a MAP because you know that going the controversy local legislation for appeal process is expensive exercise. Then MAP is the option. You can resolve your double taxation issues. However, let's say if you want to manage your future intra-group charges payment, then probably APA would be the best option for this.
APA gives some sense of certainty and prevent further dispute around those charges. So definitely what you said, that it depends entirely on the stake involved in the transaction and everybody needs to do their and it's a fact driven exercise, and it depends on the risk appetite of the taxpayer also, along with also it is a function of cost benefit analysis which taxpayer need to do and see what could work best in facts of the situation. Thanks, Anil. That wraps up today's episode. Thank you everyone for tuning in. Until then, take care.
Thank you everyone.